Every day in Kenya, opportunities rise, but so do challenges. And while progress is uneven, Safaricom is changing the game quietly, powerfully, and digitally. The Inua Jamii program was introduced by the government in 2012 and is a lifeline for over 1.7 million vulnerable Kenyans, providing them with a monthly stipend. This was done through banks, which proved expensive and inconvenient. In January 2025, Safaricom partnered with the government to enable beneficiaries receive funds on their mobile phones. Beneficiaries now withdraw their funds at any M-Pesa agent countrywide. It is simple, secure, and seamless. For many years, Kenya's health system was fragmented, underfunded, and offline. In August 2024, the government contracted a Safaricom-led consortium to build a comprehensive digital framework designed to connect and manage all health-related data and processes. So far, the project has registered over 30.5 million Kenyans and enabled them to contribute to Kenya's new social health insurance program. Those registered can access free healthcare services at any public level 2 and 3 facilities in the country. Kenya's National Fertilizer Subsidy Program was established to help farmers access fertilizers and hybrid seeds in order to increase food production. In 2023, Safaricom partnered with the government to provide an e-voucher platform that delivers cashless vouchers to farmers. Farmers can redeem their vouchers at approved agro dealers countrywide. By the end of 2024, the government had registered over 6 million farmers who redeemed over 18 million bags of fertilizer, thus improving crop yield by almost 40%. The filing of tax returns by Kenyans every month is a manual process requiring one to log into a tax platform that usually cannot handle the workload as the deadline approaches. In June 2024, Safaricom partnered with the Kenya Revenue Authority to simplify tax compliance by publishing open APIs, allowing developers and techpreneurs to integrate tax services with the taxpayers' natural systems. For example, an employee or business owner will be able to file their tax returns directly from their organization's system. Safaricom is harnessing open APIs, catalyzing digital transformation, and powering techpreneurship. Safaricom, building Kenya's digital future.
We dream of a day when no one will have to maneuver for long distances in search of a phone signal, and I believe that day is coming soon.
In places where connection once felt impossible, communities learned to live without being heard.
And then there is this trending. The trending, the breaking news, the things that trend. Hiyo hatuna habari kabisa. Hebu utasikia after 5 days, 1 week, labda rafiki yako tu ukimpigia simu anakuambia unajua ni kitu hivi na hivi ndio ilikuwa inaendelea hapa Kenya.
And the challenge wasn't just access, it was scale.
Can you imagine Sabare sublocation that we have been visiting is 4 times the size of Nairobi County.
Na tunataka kupitisha information mpaka uende na mguu ama utafute gari. Hata gari kupatikana sio rahisi.
Wakati wote ukitaka kupiga simu, watu wanatembea for some kilometers tafuta network. But right now we are enjoying.
Sababu mbeleni hata wakati unafanya biashara kidogo kidogo, watu wengine wanasema pesa iko kwa simu, kumwambia uende toe, wanaenda 2 kilomita kutoa pesa, hapo katikati tu wanafanya njaro yao, wanatoroka na pesa. Sasa in the spot, watu wanatoa hapo tu.
What once took hours is now within reach.
Mbeleni liko tunaenda mpaka Isiolo. Unaenda kwa cyber, nilifanya kwa cyber. Lakini sasa hiyo size imekuwa ni hadithi. Sababu sasa unatumia tu simu yako hapo, unafanya everything, unafanya tipadi yako vizuri. Kama ni assessment ya NEC imekuwa rahisi sana. Network iko nzuri, hakuna stress.
And sometimes impact goes beyond what you can measure. Because when people are connected, opportunity follows.
Simoniambie bye.
We dream of a day when no one will have to maneuver for long distances in search of a phone signal, and I believe that day is coming soon.
In places where connection once felt impossible, communities learned to live without being heard.
And then there is this trending. The trending, the breaking news, the things that trend. Hiyo hatuna habari kabisa. Hebu utasikia after 5 days, 1 week, labda rafiki yako tu ukimpigia simu anakuambia unajua ni kitu hivi na hivi ndio ilikuwa inaendelea hapa Kenya.
And the challenge wasn't just access, it was scale.
Can imagine Sabare sublocation that we have been visiting is 4 times the size of Nairobi County.
Na tunataka kupitisha information mpaka uende na mguu ama utafute gari. Hata gari kupatikana sio rahisi.
Wakati wote ukitaka kupiga simu, watu wanatembea for some kilometers, tafuta network. But right now we are enjoying.
Sababu mbeleni hata wakati unafanya biashara kidogo kidogo, watu wengine wanasema pesa iko kwa simu, kumwambia uende toe, wanaenda 2 kilomita kutoa pesa, hapo katikati tu wanafanya njaro yao, wanatoroka na pesa. Sasa in the spot, watu wanatoa hapo tu.
What once took hours is now within reach.
Mbeleni nilikuwa tunaenda mpaka Isiolo. Unaenda kwa cyber, nilifanya kwa cyber. Lakini sasa hiyo saizi imekuwa ni hadithi. Sababu sasa unatumia tu simu yako hapo, unafanya everything, unafanya tipaji yako vizuri. Kama ni assessment ya NEC imekuwa rahisi sana. Network iko nzuri, hakuna stress.
And sometimes impact goes beyond what you can measure.
Good morning, ladies and gentlemen, and welcome to the full year results announcement for Safaricom PLC for the period ended 31st March 2026. On behalf of our board of directors, the management team, and the staff of Safaricom PLC, we thank you very much for joining us in person and virtually for this event. My name is Caroline Wambugu. I serve as the Head of Financial Planning Analysis and Investor Relations here at Safaricom PLC, and I'll be your moderator this morning. It's always a joy to connect with you and engage with you during such seasons. And as we do so, should you wish to keep your social media followers updated, our hashtag today is Safaricom FY Results, and it's appearing on your screen, Safaricom FY Results. And in staying committed to our promise of diversity and inclusion, our sign language interpreters are Godwin Mwamba and Fiona Mweresa. To kick us off this morning, we'll start with our Group Chief Executive Officer, Dr. Peter Ndegwa, who will give us a business overview delving into our purpose and strategy. He will be followed by our Group Chief Financial and Innovation Officer, Dilip Pal, who will take us through the financial performance and results for the period under review. Peter will then come back to give a summary and outlook, which will then pave way for our Chairman, Adil Kawanja, to share his closing remarks. Thereafter, we will field a question and answer session, which I want to hope that all of us will gladly participate in. And for you online, kindly share your questions with us through the Menti platform, that's www.menti.com, and use the code that is now displayed on your screen. The code is 36462487. 36462487. Just get into the platform right now, because as we go through the presentations, we want you to be posting your questions simultaneously. It's important to remind us that we make statements that contain projections or are forward-looking and that relate to, amongst other things, the strategies, outlook, future events, and performance guidance of Safaricom PLC and Group. These are not guarantees of the company's future operating or financial results and involve certain unforeseeable risks and assumptions. We trust that you will perform your usual due diligence in the application of the same. Now, before I call upon our first presenter, here is a quick overview of what will be covered. We will start with updates on our purpose, then a recap on strategy and key highlights, followed by updates on the operating review for both the markets that we operate in, that's Kenya and Ethiopia, which will then pave way for the group financial performance detailed review, and finally conclude with dividend updates and guidance for the financial year 2027. I trust you're in for a good time as we get into this particular session. And now, allow me to welcome our Group CEO, Dr. Peter Ndegwa, to make his presentation. Thank you.
Good morning, everyone. Morning in the room. Yeah, you might scare the people online if you don't say good morning with a lot more energy. We've given you breakfast, unlike those guys who are calling on. So it's very good to see all of you. Thank you, Caroline, and welcome everyone. Yeah, so fellow shareholders, representatives of the investor community, the board, management and employees of Safaricom Group, members of the media, whether present or online, and the online community, invited guests, ladies and gentlemen. Thank you for joining us this morning as we present our financial results for the year ending 31st March 2026. Before I start, I wanted to take a moment to thank and recognize all Safaricom employees in Kenya, but also in Ethiopia, for your dedication and the hard work you've put in to enable us to deliver the strong results or sets of results that we will be announcing today. Financial year 2026 marked 25 years of Safaricom, a milestone we celebrated with our customers, partners, but also country at large. To everyone who has walked this journey with us, we say thank you for your trust that you have placed in us for all the years. Let me now start with our purpose of transforming lives. Ladies and gentlemen, Safaricom has always been about purpose. It is why our business exists. We bring our purpose to life through accessible products and services and through the support to our communities by our two foundations. We have integrated 9 UN Sustainable Development Goals, which is SDGs, into our business model, aligning commercial priorities with sustainable development outcomes. This integration creates shared value, improving livelihoods, driving innovation, whilst delivering long-term responsible growth. On planet, we are committed to a net positive future. We are actively transitioning our energy sources to greener and more sustainable alternatives. Our successful green bond, which we raised an initial tranche of 20 billion Kenya shillings, will finance energy-efficient investments, including the solarization and energy modernization of our network. On people, we continue to expand digital and financial inclusion and continue to make progress on diversity and inclusion outcomes. Then through M-Pesa, Kadogo, which is the smaller transactions below 100 for P2P or persons-to-persons transfer, but also below 200 for merchant transactions, 17.1 billion transactions. That's a big number. You can calculate what it is per day, which is 58% of all M-Pesa activity were free during the year, significantly expanding access. Additionally, over 2 million customers took their first step into structured savings and investments through ZD Money Market Fund, whilst more than 500,000 retail investors are now accessing the stock market via ZD Trader. You should clap for that. Let us now see how we are investing in our future. Let us now see how we are investing in our children, the citizens of the future. Through the Citizens of the Future program, we have made a bold long-term commitment to education outcomes in Kenya. We believe that investing in education is the most powerful thing we can do to secure the future of our children. We are committed to building and refurbishing at least 100 schools and providing scholarships to at least 2,000 students annually over the next 5 years. We will also train between 10,000 and 20,000 teachers over the same period to empower them and their students with digital skills. We've already begun delivering on this commitment, as you can see on the screen. This example reflects the impact we aim to scale across the country. Turning our focus to our strategy. Our vision is to be Africa's leading purpose-led technology company by 2030. This is the first year of our 5-year strategy cycle. We've made progress in execution across key priority areas. As you'll see shortly, this has led to a robust performance and strengthened commercial momentum across both markets. Let us now see how we are accelerating towards becoming a TechCo. Our journey to being a technology company is continuous, and we are making progress each year. We are deploying network and broadening financial inclusion to ensure that customers have seamless access to the internet and intuitive digital services at scale. We are turning these and other core capabilities that we have into commercial engines, helping enterprise and public sector to digitize at pace. We are becoming an AI-first organization running an intelligent network and platforms This is enabling faster, smarter decisions and more precise execution. We are also using technology to run a leaner, more efficient business, reducing our cost to serve and passing those benefits on to our customers through better pricing and experience. And finally, we are building the platforms, partnerships, and talent pipeline that will power Safaricom for the next wave of innovation. Let us now look at how we are using artificial intelligence, which is AI, to enable trust, agility, and efficiency. AI is fundamentally shaping how we operate across the group. It is enabling how we design our products, engage our customers, manage networks, and allocate capital and mitigate risk. We have already started to see early gains in improved customer personalization and experience, fraud detection and mitigation, and network optimization. The foundational blocks that you see at the bottom that supports these pillars are the data infrastructure, like data centers and capacity, and compute capacity, governance frameworks, and also capability and talent. Turning our focus now to review the operating environment, starting with Kenya. Kenya's economy remains broadly stable, with GDP growth at 4.6%, easing inflation, lower interest rates, and a stable shilling against the dollar. This has provided a measure of predictability to businesses and also households. But despite strong macro fundamentals, the economy remains exposed to fiscal pressure and also the impact of emerging geopolitical risks, including the US, Israel, Iran war. Not sure whether that is the term for that war, but I'll call it what it is. On the regulatory front, we are pleased to have secured our 25-year license renewal. There was an extension for 2 years. Now we have certainty and have secured the renewal. This is a major milestone in our business, bringing greater long-term stability and investment confidence to the industry. This is not just about Safaricom, but it's also to the industry. We will continue engaging proactively with regulators on emerging policy areas in order to improve inclusion and make services more affordable, benefiting all Kenyans. Let me now go into the review of each of the individual business areas in Kenya. On our consumer business, our segmented-led approach is deepening inclusion for diverse customer segments, from emerald to farmers, to border riders, and to the youth. As a result, we grew our youth platform, which we call S-Hook, to over 6 million customers, whilst BeLife, which is our time-based data bundle, grew to over 5 million customers. Through partnerships, we continue to enhance value to our customers with expanded 4G device financing, tokenized insurance, and relevant content. As a result, we now have more than 30 million customers who are on 4G devices. You should clap for that. Because anyone who has a 4G plus device has much better access to and experience on the internet. With more than half of those customers consuming more than 1 gigabyte of data per month. On our financial services business, we made significant progress in enhancing our fintech platform. Fintech 2.0, which is what we call it internally, will allow us to innovate with greater capacity and resilience. The platform is now powering our next chapter of growth, delivering improved stability, security, and speed, whilst enabling new services like shared wallets, tap to pay, and faster lending. We continue to democratize access to savings and investment, reaching customers who previously had no access to formal financial tools. Over 500,000 customers, as I've said earlier, have opted into ZD Trader, and already 84,000 of them are trading in the capital markets from the comfort of their phones. This is a meaningful step towards making wealth creation accessible to every Kenyan. Then we released our unified app early this month, which we call My One App. The strategic intent is to offer all Safaricom services in one place with simpler, more intuitive experience. Yeah? You know why I'm smiling? Because of what is coming next. We have received feedback, though, on the challenges that customers experience whilst accessing the app, particularly during onboarding. The challenges have been mostly pronounced amongst our diaspora and also roaming customers, but also as well those with auto update settings enabled on their phone who were automatically migrated to the new app. I want to apologize, just like we did a few weeks ago, and give an assurance that we are acting on this feedback. The app is now stable for customers on the latest version, and actually I should say that about 80% of those who have already who are on the new app on the latest version, and customer experience has improved. We are now seeing great adoption momentum with 3 million customers already on board. We remain committed to resolving all outstanding issues, particularly for our diaspora customers, including having a dedicated care desk for them, or at least ways of contacting us, and urge our customers, both domestic but also foreign, to continue to give us feedback. On our private enterprise and public sector, we are providing digital solutions and deepening our role as a trusted partner in building the digital public infrastructure that will power Kenya's digital future. We've developed solutions across healthcare, agriculture, and economic empowerment. We are also enabling micro, small, and medium enterprises to grow through simple digital-first solutions. We are also working with large businesses to support them with AI, Internet of Things, which we call IoT, and integrated solutions to manage their operations and run more efficiently, leading to improved productivity and growth. For our fixed broadband business, we are expanding our coverage to more households across budget and lower income segments, improving access to the internet and to essential digital services. We launched more affordable options such as Fiber Lite at 1,000 to 2,000 Kenya shillings, and also are piloting tokenized Wi-Fi. We are offering faster issue resolution, giving customers more control and a safer, more reliable internet experience. Finally, we've partnered with the public sector to provide affordable connectivity in the Kenya Affordable Housing Program, ensuring that homes are connected from day one. I'll now turn my focus onto our Ethiopia business, starting with the operating environment. Ethiopia recorded robust GDP growth at 9.2%, alongside easing inflation to single digits, which is the lowest since 2018. However, the ongoing currency regime reforms and the impact of it, the fiscal pressure that the country faces, but also the Iran, the US, Israel, Iran war, has created uncertainty for the country too. But on the regulatory front, I should say, progress has been made on industry-led interventions, on continuing to level the fintech playing field, and also market repair guidelines on the GSM side on pricing and infrastructure sharing. These interventions present opportunities to build a more sustainable industry, creating healthier market dynamics. On digital access and purpose within our Ethiopia business, whilst our foundation work is still at an early stage, we are very proud of the impact and the support given to our communities. We set out to expand access to digital skills, economic empowerment, healthcare, and inclusive livelihoods. We've invested in youth talent programs, in agriculture, healthcare, and also financial inclusion. Thousands of Ethiopians, especially the youth, are gaining access to training, funding, and tools that improve incomes and livelihoods. We are also leveraging on strong partnerships to create sustainable platforms that will deepen our support for communities now and into the future. Let me briefly speak about how we are doing in executing our strategy in Ethiopia. We are very pleased with the commercial momentum that our operation in Ethiopia is delivering. We continue to expand our network and grow our customer base. We are positioned as a data network, offering high-speed 4G experience. We've simplified and unified customer experience across key touchpoints. We've also expanded self-serve capabilities and delivered customer care in local languages, helping build loyalty. Our brand strategy is youthful and inclusive, with clear positioning. And our customer segmentation is enabling us to speak relevantly to the key segments that we have in the Ethiopia market. Let me now turn on to some of the key performance highlights in Ethiopia. There are some key milestones that we have achieved as a result of our execution of our strategy. Our network and customer growth has accelerated with 13.6 million customers by the end of the year using our connectivity services. Please clap for the business. The CEO is sitting in front of us, so we should make him feel happy. I'm sure you're happy. This growth has been driven by a stronger network now covering 60% of the population. We've made further progress in establishing M-Pesa's presence with 5.2 million active customers, up 119% year-on-year, supported by over 70,000 merchants in our ecosystem. We are growing our merchants and agent network nationwide to drive everyday usage. This positions M-Pesa as a core enabler of financial inclusion in Ethiopia now and in the future. We are also building a business that's truly Ethiopian. We've reduced the expatriate staffing, transitioning most roles to local talent. Now we have only about 19 experts in that market, because we believe that digital Ethiopia must be delivered by Ethiopians. We will also continue to invest in our talent through capacity building and training. I'm sure this is what everyone has been waiting for. So having taken you through the context and drivers of the business for the year across both markets, I'm now pleased to share our financial performance in summary. And I deliberately didn't put the slide before I said that. So, ladies and gentlemen, this has been a year to be proud of. Kenya has delivered outstanding performance, and Ethiopia has made a valuable contribution, together making this one of our strongest results yet. Safaricom Kenya, and please listen to some of these numbers, achieved the 400 billion shillings mark. The 400 billion shilling mark in service revenue, which is approximately $3 billion, Kenya alone, representing 10% year-on-year growth. This is our third year in a row of delivering double-digit growth. On the profitability side, on the returns, earnings before interest and taxes, which we call EBIT, grew 15.3% in Kenya to 182 billion Kenya shillings, and net income grew 24.7% to 119 billion Kenya shillings. Ethiopia, on the other hand, marked a major turning point during the year. We sustained commercial momentum, particularly in the second half of the year, following the implementation of regulator-approved pricing structures. Startup losses reduced by half. I think you should clap for Ethiopia. Startup losses reduced by half. And the business is now beginning to play a meaningful role to the group performance. The business is on a clear trajectory. This is the Ethiopia business, is on a clear trajectory towards earnings before interest, tax, and depreciation, which we call EBIT, break-even, which I know is a very important parameter for investors, supported by greater regulatory oversight and healthier industry dynamics. So at a group level, we delivered strong double-digit growth across all key metrics. Yeah? When you are a CEO or a CFO presenting these numbers, you're not used to delivered strong double-digit growth across all key metrics. But here is the important one. Net income, excluding minority interest, which is net income attributable to shareholders of Safaricom, grew 67.3% to a record 100 billion Kenya shillings. So on that very nice note, I hand over to my CFIO, Dilip, to take you through the performance in much greater detail. Thank you.
Thank you, Peter. Good morning. That was not the end of the presentation, by the way. So, good morning once again. And Hamjambo and men adirachu to our Ethiopia colleagues and community. Thank you for joining us today for our results presentation for the year ending 31st March 2026. It is my pleasure to take you through our financial performance. So picking up from Peter's last slide and comments, indeed, we have delivered exceptional results in FY26. Please note that the detailed results presentation will be available on our website after this session. Now, let's begin with our performance in our Kenya business, and then I will move to Ethiopia business after Kenya performance presentation. As always, we begin with the customer number, as they remain the foundation of our business. In our Silver Jubilee year, we delivered strong customer growth across all segments, a reflection of trust and loyalty we have built over 25 years. Our business continued to scale with the 90-day customer base at 57.9 million and 30-day active customers at 39.9 million, just touching 40 million mark. We delivered double-digit customer growth in M-Pesa and also in fixed segments, alongside a very strong H2 recovery in the connectivity segment. Turning to service revenue, we delivered double-digit growth, as Peter has already mentioned, crossing the 400 billion Kenya shilling mark. Momentum strengthened in H2, with service revenue growing by 10.7% year-over-year, compared to 9.3% in H1. M-Pesa remained the key driver of revenue performance, contributing 59.2% of the total revenue growth, expanding its revenue mix to 45.6% and growing by 13.4% year-over-year. Connectivity business, which still continues to be the largest contributor of revenue on the base, have grown by 6.9% year-over-year. Of course, led by mobile data growth, which grew by 14.4%. Fixed revenue grew by 12.2%, driven by excellent growth in consumer segment revenue, and we'll provide more detailed explanation about all the three segments of the revenue in the upcoming slides. Now, let's start with M-Pesa performance. It is worth noting that the M-Pesa business remains robust, supported by the investments we have been making and also the ecosystem that we have built. M-Pesa revenue profile continues to evolve with increased contribution from new verticals. The contribution from traditional revenue, which comprises, which probably you're familiar with, the consumer revenue, consumer payments, as we call, and also the withdrawals, that has declined from a peak of 67% to 61% in 5 years, with the contribution from withdrawal revenue, which has declined now from 38% to 20% in FY26 in the last 5 years. Financial service segment, which includes credit, wealth, and insurance, continued to scale, growing 19.1% year-on-year, the fastest growth that we have seen in the last 3 years. Usage remains strong, with total transactions up by 25.1% to 46.4 billion transactions, with non-chargeable transactions accounting for 57.8% of total volumes. You heard Peter talking about that. This clearly is anchoring our ethos of affordability. Value transacted on the ecosystem of M-Pesa expanded by 8.9% year-over-year to 41.7 trillion shillings, and while monetization remains healthy, with chargeable transactions growing by 11.5% year-on-year to 42.3 transactions per customer per month. Looking at payments revenue now in a bit more detail, total payments revenue grew by 17.7% year-on-year and now accounts for 74.4% of M-Pesa revenue, with double-digit growth across both consumer and business payments. Affordability remains central to our business model, with 68.3% of all payments transactions being free or non-chargeable. Important to note is the growth in microtransactions, what we ordinarily refer to Kadogo transactions. Peter spoken about that as well, which is P2P transactions up to 100 shilling and merchant transactions up to 200. Kadogo transactions account for 39% of consumer payments and 56.8% of business payments, growing 40% and 30% respectively. And this is how we align our business to our purpose by driving inclusion through affordability as we transform lives. Going into the details of merchants and global payments, the combined merchant base of formal merchants, what we call them as Lipana M-Pesa merchants, and informal merchants, which is Pochila Biashara, reached 3.1 million, representing a growth of 71.4% year-on-year. Lipana M-Pesa merchants also grew strongly by 54.2% year-over-year, crossing the 1 million mark, delivering a growth of 21.7% in revenue. Pochila Biashara, merchants grew by 81.5% year over year, crossing the 2 million mark. And also with the revenue growing, actually revenue doubling to 4 billion in FY26. The total revenue from merchants payments grew by 35.8% year over year, accounting for 43.6% of the growth in total business payments revenue. On global payments, revenue from international remittance makes up 83.4% of the global payments revenue and grew by 17.5% year over year to Kenya shilling 4 billion. We are extremely pleased with the acceleration in our M-Pesa focus areas as we aim to be a responsive company to the changing needs of our consumers. Moving to the financial service segment, the total number of distinct credit customers across all products more than doubled this year, reaching 18 million customers. The growth accelerated in the second half of the year, driven by increased eligible customer base and also partner credit limit enhancements that allowed more customers to access these products. As you have noticed, the credit portfolio has been on a recovery path since repricing was done to make it more affordable and has recorded revenue growth of 20.6% year over year. On wealth, we are seeing increased customer appetite to grow savings through investments in money market funds. Assets under management have grown to Kenya shilling 21 billion, supported by 2.2 million customers, which is very encouraging. As you have seen from the chart, the growth of year-over-year growth is amazing, both on the customers as well on the asset under management. We'll continue to work together with our partners to meet the changing needs of our customers. Lastly, on M-Pesa, the super app, both super apps actually, both the consumer as well as the business apps, they play a pivotal role in facilitating digital transition to support consumer lifestyle and business transactions. I'll give you numbers, statistics, but this is on the old app. And of course, Peter has spoken about the new app. You'll see from the numbers why Super App is so important to our customers. And that is why there is so much of emotion when we are not able to deliver what customers expect us to deliver. So active customers on the consumer app or the old M-Pesa app grew by 40% year over year to 6.6 million, with active merchants reaching 459,000. Usage on both apps grew sharply year over year, with the consumer app up 55.3% and the business app up 68.6%, and this is very, very encouraging. Now, revenue from the two apps combined, they contributed 1/4 of the incremental M-Pesa revenue in this financial year. Yeah, you heard it right. The revenue that came from these two super apps combined, of the incremental revenue that you have delivered in M-Pesa, 25% of that came from these two super apps. Yeah. Please note that more detailed information on M-Pesa performance would be available, and you can refer to our results booklet, which will be available on our website shortly. Let's move to now connectivity business. As I mentioned, this still continues to be the largest contributor of our revenue. And this includes voice, mobile data, messaging. This revenue segment, connectivity revenue segment, grew 6.9% year on year. And this has accounted for 1/3 of the growth in service revenue. And just to mention, the second half of the year recorded very strong growth of 8.4% compared to 5.3% in H1. This is primarily driven by a strong recovery in voice revenue in H2. Voice revenue grew 4.6% in the second half, offsetting a 2.1% decline in the first half, which resulted in a year-on-year growth of 1.3%. Data revenue is the prime growth driver of connectivity revenue, contributing 82.5% of the year-over-year growth and growing by 14.4%. Our commitment to customer-centric pricing and segment-led value proposition remains unwavering, even in the face of evolving market dynamics. Now let's keep a little bit more, let's do a little bit more on the mobile data performance. As I said, that's really the prime growth contributor of the connectivity revenue. Data revenue grew faster in the second half by 15.3% year over year, yielding a double-digit growth of 14.4% year over year. The main driver of the growth is increased usage powered by increased uptake of 4G plus devices, which now crossed 30 million. You heard Peter talking about that. And this includes, that 30 million includes 1.6 million 5G devices, which has grown 55.5% year over year. The increase in devices, 4G plus devices, coupled with the provision of the right content and personalized offers to our customers through big data and analytics and AI, drove usage, with the average usage per user growing 16.6% year over year. 14.5 million customers are now using more than 1 GB in a month, representing a 22.4% growth. This is important, the customers who are using more than 1 GB, because of our base. As you can see, actually, less than half of our 4G plus devices, they are using more than 1 GB. And you can imagine customers who are not using 1 GB in a month, they have a huge opportunity to increase growth. And that's why we believe that mobile data growth trajectory can remain for the foreseeable future. The chart on the bottom left shows the usage by device technology. The users with 4G and 5G devices quite naturally have higher usage levels of 12.9 GB and 5.7 GB respectively. This cements our strategy of driving greater use of 4G plus devices, and it's working. Finally, let's talk about the fixed business. Revenue growth was stronger in the second half. You recall our first half growth was single-digit growth. Second half grew 14.9% year over year. And we have seen that momentum driven by the customer growth. The top right chart shows that strong momentum on customer growth continued, closing at 491,000 customers, with consumer customers growing by 35% and enterprise customers growing by 19.7%. Homes passed, which is a very important KPI, now closed at 807,000, with homes connected growing by 230,000 year over year. The consumer fixed segment performed extremely well, which makes up actually 44.7% of the fixed service revenue, recorded a 19.5% year over year growth. With the enterprise fixed segment, a bit of slowdown in revenue, just grew 4% due to a change in the mix of customers. We are having more and more SME customers with lower ARPU, and that's why, despite customer growth, that's not translating into a revenue growth. The chart on the bottom right indicates that fixed wireless customers, which is also one of our growth pillars, constitute 27% of the fixed connections and have grown by 53% year over year, with 5G FWA making up 1/3 of this growth. Let me give some highlights on our cost lines. Direct costs grew 1.7% year on year. And if you exclude handset cost, direct costs grew 4.7% year on year, and delivering a healthy contribution margin at 74.9%. The reduction or slower growth in direct cost is also a result of reduction in our handset sales, but most importantly, reduction in bad debts. You recall in FY25, we had a higher hit in our bad debt provision, but that has now normalized, and now we see a lower growth in the direct cost. Operating costs grew by 9.6% year-on-year. The cost increase was majorly driven by the euro depreciation to KES, which depreciated by 7.3%, and an increase in our advertising and promotional cost. We did mention about that in H1 as well, because of our milestone celebration of Safaricom at 25 and also at M-Pesa at 18. If you exclude Forex impact, the operating cost grew by 7.7% year-on-year, and the OPEX intensity broadly remains stable at 18.1%. Overall, our costs are well managed and have supported delivery of a strong bottom line. Now, in summary, Kenya commenced its 5-year strategy, and you'd recall this is our first year of 5-year, the FY 2030 strategy, on a very, very strong footing. The business delivered double-digit growth across all key financial metrics, building off a very high base from last 2 years' strong performance as well, making this achievement notable. Service revenue recorded its highest ever absolute year-over-year growth, increasing by Kenya shilling 36 billion. EBITDA and EBIT margins EBITDA and EBIT margins expanded by 2.8 percentage points and 2.7 percentage points compared to previous year, closing at EBITDA margin at 56.8% and EBIT margin at 44.2% respectively. Net income, of course, crossed 100 billion mark. You saw the number, 119 billion, growing 24.7% year over year. We also delivered a very strong cash flow performance. Operating free cash flow grew by 16.7%, supported by a very strong EBITDA growth with a very stable capex to sales. Now, let's talk about Safaricom Ethiopia financial performance. We mentioned about in our half-year results that Ethiopia is no longer considered a hyperinflationary economy effective July 2025. We have therefore discontinued IAS 29 reporting, apart from the indexed balance sheet non-monetary assets that will unwind over time, impacting depreciation and amortization. And we spoke about that at length during H1 results release. Now, again, starting with customers and usage, our 90-day active customers have recorded significant growth across all segments. You have seen from Peter's presentation, 90-day customers reached now 13.6 million. Actually, with that, the group customer base have now crossed 71 million. Data customers grew 1.5 times year on year, reaching 10.4 million. So it crossed the 10 million mark, data customers, representing a 93.7% penetration of the 90-day active voice customers, which is very important. So voice customers are using data. And you have seen that data is how we started in Ethiopia. Voice customers also grew significantly, 1.4 times year over year to now 11.1 million. On usage, we continue to see acceleration, notwithstanding price increase in the last quarter of the year. Data usage continues to grow, recording an average usage of 6.9 GB, which is actually 1.4 times that of Kenya. Voice usage reached 144.6 minutes per user, a growth of 13.6% year over year. We are truly encouraged by this progress and are on track to meet our commercial scale targets as part of our medium-term outlook that we have spoken about in the past. Now, unpacking the service revenue a little bit more in detail. Service revenue in ETB terms more than doubled year over year to ETB 15.9 billion and accounted for 13% of the group service revenue growth in FY26. So you can see that Ethiopia is now beginning to show up in the group performance. The revenue mix is shifting as the business benefits from the network effect on scale of the customer base and as we also enrich our product offerings in the market. Voice revenue has more than doubled year over year and now accounts for 21.4% of service revenue compared to 15.1% last fiscal year. Mobile data revenue still continues to be the biggest revenue contributor, growing by 42.5% year over year and contributing 2/3 of the incremental growth in service revenue, which affirms our leadership in providing a very superior network in the market. 10.7% of our service revenue comes from other service lines, including fixed service lines revenue, where we are now seeing some momentum, although at a very small scale. Overall service revenue ARPU has grown 25.7% year over year to ETB 151.7. Now, let's look at the impact of the industry price corrections. We revised data and voice rates in late December, early January, after the Ethiopian Communication Authority introduced cost-based retail tariff regulations. The positive impact of that is reflected in our Q4 numbers as shown in the chart. Data revenue in Q4 went up by 33.8% quarter on quarter, with the effective rate per MB increasing by 21.7% quarter on quarter. Voice revenue also reflected growth in Q4 by 18.6% quarter on quarter growth in revenue, with the rate per minute rising by 44% to 29.8 ETB cents. As Peter highlighted, we have a very clear strategy to bridge the gap to the cost of service as per the Ethiopian regulator, which is set by the regulator, and this remains a key focus in this fiscal year. Now, on funding, the total funding at the end of, I'm talking about the Ethiopia funding, the total funding at the end of March 2026 stood at $2.65 billion, with shareholders' equity increasing by $238 million. Part of these funds were used to reduce deferred vendor payments by $121 million. During the first half of the year, Safaricom Ethiopia secured an additional $100 million facility, and in the last quarter of the year, this increased by a further $34 million, resulting in a total foreign currency debt of $234 million at the end of the year. Overall, the business is well funded, leveraging the Ethiopia balance sheet through debt with reduced reliance on equity. Now, to summarize, the overall financial performance of Ethiopia is just over 3.5 years now that we are commercially operating in Ethiopia. This has been a period characterized by multiple challenges and learnings, both micro and macro, as we navigated the establishment of a greenfield operation. And we are pleased with the results of FY26. Ethiopia demonstrated a stronger performance in the second half relative to the first half of the year in all key financial metrics. EBITDA loss reduced significantly in half two, with a H2 loss of 2.7 billion compared to a loss of 12.4 billion in H1. EBIT for the year halved compared to last year to a loss of 30 billion Kenya shilling, and startup losses declined by 41.2% to Kenya shilling 21.2 billion. The pathway to EBITDA breakeven and profitability is definitely taking shape, and we are committed to staying the course. So let me give you some group performance on a consolidated basis. I'll start with CapEx. So let me start with the group CapEx. So we continue to invest in our network and in IT to support capacity upgrades and customer experience. Our group capital expenditure in the period declined by 18.4% year-on-year to Kenya shillings 74.5 billion, with the capex investment in Safaricom Ethiopia declining by 52.2% in line with our market guidance. The Ethiopia business rolled out an additional 363 sites in the year, bringing total sites to 3504. The group capex intensity, which is capex to sales, we report at 17.5% for the group, is very much well within what we targeted for this year. So we're also giving you a view about the group debt and the net debt to EBITDA. So on our debt levels, overall group debt levels are stable, with Kenya actually declining by absolute decline of 19.7 billion year over year. And you have seen Ethiopia have taken additional debt, but overall group level debts are stable. And the other important part is we are now moving more towards long-term debts. 77% of group debt is long-term, which is a 16.4% shift year over year, signaling reduced reliance on short-term funding. And this has happened after our successful Kenya shilling 20 billion medium-term green bond that we have issued in December 2025. And on the back of stable debt and supported by very strong EBITDA, the group net debt to EBITDA is actually improving. And you can see that it's reflected in the both, whether you include lease liability or whether you exclude lease liability, it's very comfortable of net debt to EBITDA level. And in the period under review, interest cost has also declined significantly by 24.3%, benefiting from the lower debt levels, as I mentioned, and also reduction in the effective interest rates. But just to remember, this is on the back of increased costs that we have seen in the past year. With the improvement in the macroeconomics parameters, we have started to see easing up the interest rates, and that's also helping us in the reduced interest cost. Now, in conclusion, to summarize the group financial performance for the year, outstanding financial performance for Kenya, with impressive double-digit growths on all key financial metrics. If you like, you can clap for this again. Ethiopia's losses now reducing, and it's related to the previous period, and definitely it's improving the group performance. The performance excluding IAS 29 shows very solid performance. You have seen it in Peter's slide as well. Overall service revenue growth, group revenue growth of 11.1%, EBITDA growth of 35.4%, with EBITDA margin for the group at 51.5%. First time going above 50% at group level post entry into Ethiopia. Yeah, after we started Ethiopia operation, this is the first time we crossed 50% mark. EBIT growth of 58.5% year on year, and with the group net income excluding minority interest growing 67.3% year on year. This of course is excluding IAS 29, but as you will see from the numbers, with IAS 29 and what we call that group net income excluding minority interest, that has also grown very healthily with 37% growth year over year. Last but not the least, the group operating free cash flow grew significantly by 39.7% year on year, supported majorly by increased EBITDA, improvement also reduced losses in Ethiopia, and of course the lower group capex that I have already spoken about. As Ethiopia business is gaining scale, the overall positive impact to the group performance is visible. So it's not future, it's already present. Ladies and gentlemen, this concludes my presentation. We now move into the second year of our Vision 2030 strategy with a commitment to carry on our execution momentum. And just to mention that, the result materials that I have just presented, that will be available on our website shortly. And thank you for your time. Back to you, Peter, for your additional remarks.
Let's clap for our CFIO once again. I am sure, on a lighter note, I'm sure some of you will be asking, what is this IS-29 stuff? Only Dilip understands, by the way, even internally, so even us, we don't understand. That's International Accounting Standard 29. All right. So thank you, Dilip. Ladies and gentlemen, let me take a moment to summarize the key takeouts from our strategy execution. So we have shown strong execution in our first year of our 2030 strategy, signaling a great setup for delivering on our vision that has been approved by the board for 2030. We are delivering strong performance with acceleration, as you saw in the second half of financial year 26. We surpassed group guidance with outstanding Kenya performance. I'm sure investors will have seen, will have noticed that offsetting the impact. So the outstanding Kenya performance offsetting the impact of currency reforms in Ethiopia and the timing of market repair actions in Ethiopia. We've driven strong customer engagement and have had an innovative spirit leading to growth across all customer segments. You heard Dilip say that our total customer base is now standing, when you combine the two markets, at 72 million customers across the group. Please clap. They're going to represent the largest, one of the largest. I was speaking to him and we were saying we will start now competing who has the largest customer base across the Africa telcos. But yeah, that's for another day. And now Ethiopia is starting to become a material part of our group with 15% contribution, close to 15% contribution to growth, to group revenue growth, and of course much more, as you'll have seen, the impact of the reduction in losses in F26. And for Ethiopia, we expect this business to have even greater impact in the future as it continues to mature. Now let me go to one of the most probably awaited item, which is dividends. So in line with our purpose of transforming lives, we continue to create value, as I said earlier, across our customers, community, and society. But we also don't forget our shareholders and investors. So we are proud to announce a record dividends for the financial year 2026 of two. Okay, so we are proud to announce a record dividends for financial year 26 of 2 shillings. And I know 2 shillings sounds like a small number. Let me put it now in numbers, totaling 80 billion Kenya shillings, which is a 66.7% increase year on year on dividends. Yeah. So the profitability is translating into dividends for investors, whether those are institutional or retail investors. This comprises, of course, which is already paid, interim dividends of 85 cents, and also a recommended final dividends of 1 shilling and 15 cents, which will be subject to the shareholder approval at the upcoming AGM in July. This is a major milestone for Safaricom. Our dividend payout has risen above levels recorded pre-COVID and also prior to our Ethiopia investment. Remember, Ethiopia investment has affected our dividends in the past few years. Now, this is well above that, showing the strength of our franchise. We have achieved this despite our investment of $1.2 billion in Ethiopia without increasing our debt ratios, as you'll have seen from Dilip's slides. So to our investors, we thank you. We also thank you for your patience over the past 4 to 5 years as we have navigated a startup in Ethiopia. And that patience is not unrewarded. I hope the dividends start to make an impact. This is what long-term conviction and disciplined execution can deliver. And then turning on now to the current financial year, in terms of the key priorities. In Kenya, we are focused on building a resilient, converged fintech ecosystem to future-proof M-Pesa amid rising competitive activity. We are also deepening customer value through targeted converged propositions across our business and AI-driven capabilities. In Ethiopia, and I hope that Wim is listening, our priorities are clear. Execute the financial year 27 plan and achieve EBITDA break-even. Continue to create a sustainable business by implementing regulatory guided actions and grow M-Pesa further into the future. You have seen the impact that Ethiopia has, both on the top line, but also more importantly on the bottom line, as those losses reduce. But as we break even, it will even be more significant. And this all, in the two markets, will be underpinned by deepening trust across our customers and also our society, as we have talked about earlier. Let me now go into the guidance for the new financial year, which we've already started in FY27. So we guide that Kenya earnings before interest and tax will range 195 to 199 billion Kenya shillings, representing a growth of 9% on the upper range and 8% in the midpoint. We project to half, as in reduce by 50% or more than 50%, earnings before interest and taxes and startup losses for Ethiopia to between 15 and 12 billion, contributing further to the group bottom line. Group EBIT, which is earning before interest and taxes, is projected to be between 180 to 187 billion Kenya shillings. So we are getting closer to the $1.5 billion business in terms of profitability, with an 18.5% year-on-year increase, which will boost group's profitability. Kenya capital expenditure is set between 58 and 61 billion Kenya shillings to support growth. So you've seen that we are continuing to invest in the business. Ethiopia capex will drop to between 6 and 9 billion Kenya shillings, which is half of what we invested in 26, as we get closer to infrastructure scale of 4,000 sites. The reduction in Ethiopia capex shows a maturing business, moving away from high investment phase that we have been on over the past few years to normalized investment profile. So in conclusion, ladies and gentlemen, I want to thank our Chairman Adil and the board for the support accorded to myself and also my leadership team and my entire team throughout this year. To Safaricom employees, both in Kenya and Ethiopia, thank you. The hard work and commitment to transforming lives of our customers and our communities is what makes results like this possible. To our stakeholders, customers, partners, investors, communities, thank you for your confidence in Safaricom. We are excited about the possibilities and the opportunities that lie ahead. And now, you need to listen to this one. To all the mothers in our societies and within the Safaricom broader family, I wish you all a happy Mother's Day this weekend. Thank you for being the pillars of our society. Ladies and gentlemen, asanteni sana, amesegenaru. I invite now the chairman to give his closing remarks and conclude for us.
Good morning. Shareholders, investors, board colleagues, management and staff of Safaricom, members of the media, distinguished guests, ladies and gentlemen. Thank you for joining us today for the announcement of Safaricom results for the financial year ended 31st March 2026. Just some observations. At the initial part of Peter's and Dilip's presentations, we had to ask you to clap. I think you guys were shocked and didn't know what to do. But you will note that at 2 points, you guys clapped without any prompt. The dividend and the mothers and women in this room. So those are 2 important triggers. So I'm now warning you, you can clap. So you're not going to be told to clap. I'm giving you an advance notice. So, wow, what a year it's been. Really, really remarkable story and great performance. A dividend of shillings 80 billion. There's no other company in our region that gives that. Group service revenue of Kenya shillings 414 billion. Net income 100 billion. 72 million customers across our markets. Only 2 markets, but 72 million. And perhaps most importantly, 4.4 million lives directly impacted through our foundations and CSR programs. That is huge. That is why we are here. Ladies and gentlemen, these are not just metrics. They represent the trust that we have earned, the resilience demonstrated, and the lives that we've transformed. I'm certain you listened carefully to Peter and Dilip as they walked us through the detail behind the performance. Allow me, from the board's perspective, to reflect on what truly underpins these results. First, I would like to extend my sincere appreciation to our CEO, the management team, and every member of the Safaricom family. Thank you. You have executed the strategy with discipline, clarity, and purpose. You have continued to innovate, and you have continued to deliver impact. From the older person in Kakamega receiving social support through M-Pesa, to the communities in Wajir accessing 4G connectivity for the very first time, to young Kenyans benefiting from our Citizens of the Future programs. This is the true measure of Safaricom, impact. And this is something that the board is immensely proud of. Ladies and gentlemen, these very, very good results reflect a business that continues to demonstrate resilience, momentum, and operational discipline. We have sustained strong growth in service revenue, driven primarily by M-Pesa and data, while maintaining profitability despite the continued investment in Ethiopia. At the same time, we are beginning to see benefits of scale in Ethiopia, with improving commercial momentum and narrowing losses. This balance of growth, investment, and discipline is exactly what the board expects at this stage of our journey. We continue to operate in a complex and evolving global environment. Geopolitical uncertainty, inflationary pressures, currency volatility, changing consumer dynamics, war in the Middle East continue to affect the cost of doing business and customer affordability. In this context, the board has been particularly encouraged by the management's response. Their focus has been clear: protect customer value and affordability, improve precision and pricing segmentation, continue innovating in products and digital services. At the same time, competition, particularly in fintech and digital services, continues to intensify. Our approach remains deliberate and disciplined. Protect the core, innovate at the edge, and consistently deliver value to our customers. This year marked the beginning of our new 5-year strategic cycle. Our ambition is clear: to become Africa's leading purpose-led technology company by 2030. The board is encouraged by the progress that we have made thus far. Execution has been disciplined, strategic priorities are clear, and the momentum is steadily building across the business. This year is particularly significant for Safaricom. As we celebrated our first 25 years, we have also secured our license to operate for the next 25 years under a unified framework from the Communications Authority of Kenya. This is far more than a regulatory milestone. It provides long-term certainty, it strengthens our ability to invest with confidence, and it reinforces the platform from which we continue delivering on our purpose. I would like to commend both the regulator and our teams for achieving this important outcome. Well done. Turning to Ethiopia, we continue to make steady and meaningful progress. Regulatory developments and interconnection, infrastructure sharing are improving transparency within the market. The pricing rationalization implemented in December last year is already generating positive commercial momentum. With network coverage now exceeding 50%, alongside our continued customer growth, Ethiopia is gradually transitioning from rollout to scale. It remains, for now, an investment phase market, but it's also a market with significant long-term strategic potential. On the proposed Vodacom transaction, there is an ongoing process. We commend both shareholders for the constructive and professional manner in which the discussions have been conducted this far. Once concluded, the transaction is expected to position Safaricom to leverage greater scale, deeper expertise, and the enhanced regional capability as we continue expanding across the region. At Safaricom, purpose is not separate from performance. It's central to performance. We exist to transform lives. And during this past year, we continue to deliver meaningful impact through the launch of the Citizens of the Future program. You saw that on one of the slides from Peter. We continued in the expansion of our financial inclusion. You'll see that you saw the numbers on the number of people reached. These are not peripheral activities. They are fundamental to building a resilient, future-ready business. As I conclude, allow me to express my appreciation to my fellow board members for their stewardship and guidance, to Peter and the management team, together with every Safaricom employee, for your dedication and hard work, to our shareholders and stakeholders for your continued trust and support, and to the governments of Kenya and Ethiopia for their partnership, trust, encouragement, and support. The board remains firmly committed to delivering sustainable long-term value. And I remain confident that you are yet to see the best of Safaricom. Thank you very much, ladies and gentlemen. I'll hand over to Carol.
Thank you, Chairman. Thank you, Dr. Peter. Thank you, Dilip, for that great delivery. Come on, let's give them another hearty clap. Indeed, ladies and gentlemen, we've come to the end of our results presentation. And wow, impressive performance marking our Silver Jubilee milestone. I've been checking the menti.com platform. Literally just 3 questions. The results are that good, there are no questions. But I want to really encourage us to ask the questions, and of course we shall also do that in room. So before we delve into Q&A, I would like to invite all of us to turn our attention to the screens and witness the impact of the programs that our leadership have spoken about. We have 2 videos, quick ones, but it's really that important that you get the context of the numbers that we are speaking to, because they come from a place of purpose, the impact and the influence we have in our community. So we have the Citizens of the Future as one of our videos. The other one, we love to call it Signal of Hope, which basically speaks to the impact our network is making in the underserved communities across Kenya. So watch along.
We dream of a day when no one will have to maneuver for long distances in search of a phone signal, and I believe that day is coming soon.
In places where connection once felt impossible, communities learned to live without being heard.
And then there is this trending. The trending, the breaking news, the things that trend. Hiyo hata hatuna habari kabisa. Hebu utasikia after 5 days, 1 week, labda rafiki yako tu ukimpigia simu anakuambia nani hii kitu hivi na hivi ndio ilikuwa inaendelea hapa Kenya.
And the challenge wasn't just access, it was scale.
Can imagine Sabare sublocation that we have been visiting is 4 times the size of Nairobi County.
Na tunataka kupitisha information mpaka uende na mguu ama utafute gari. Hata gari kupatikana sio rahisi.
Wakati wote ukitaka kupiga simu watu wanatembea for some kilometers tafuta network. But right now we are enjoying.
Sababu mbeleni hata ukazi unafanya biashara kidogo kidogo, watu wengine wanasema pesa iko kwa simu, kuambia uende toe, wanaenda 2 kilomita kutoa pesa, hapo katikati tu wanafanya njaro yao, wanatoroka na pesa. Sasa in the spot watu wanatoa hapo tu.
What once took hours is now within reach.
Mbele nilikuwa tunaona mpaka Isiolo. Unaenda kwa cyber, nilifanya kwa cyber. Sasa hiyo saizi imekuwa ni hadithi. Sababu sasa unatumia tu simu yako hapo, unafanya everything, unafanya tipaji yako vizuri. Kama ni assessment ya NEC imekuwa rahisi sana. Network iko nzuri, hakuna stress.
And sometimes impact goes beyond what you can measure, because when people are connected, opportunity follows.
Simoniambie bye.
My name is Martha. I come from a small village where dreams sometimes feel far away.
Every child born in Kenya carries within them the seeds of greatness. Safaricom and M-Pesa Foundations believe that with the right opportunity, every single one of them can bloom.
Our intention is at least 100 schools in the next few years, which is fantastic way of showcasing what M-Pesa Foundation can be. There is no county out of the 47 counties where M-Pesa Foundation has not invested.
Citizens of the Future is our commitment to transform learning, providing quality facilities, digital tools, and safe spaces in every county across Kenya. Because we know that each child is a future leader, and every future leader deserves a chance.
I just want to thank M-Pesa Foundation for what they've done for us. I want to thank them for giving us computers. For those students who, like me, those who want to study STEM, it will be easy for them to study it because the computers are here. I want to thank Safaricom Foundation for giving us lockers because in our class we sit 5 pupils in one desk.
My classmates Charles, Kinanga and I are in Form 4. We know the future is waiting for us and now we can see it. We can learn, explore, create and dream bigger than ever before.
This is inclusion. This is equity. This is what it means to invest in the heart of a nation.
Great, a truly transformative program empowering young people across the country with access to quality education. And you've seen it for yourselves, ladies and gentlemen, that indeed that is what creates the heartbeat for us as Safaricom. And I'll tell you as an employee, because we wear badges written, I am Safaricom, it's actually the reason why we show up every day. Now, we want to get into Q&A, and I'll be calling up my leaders to come on stage. I have seen very good questions coming in, so keep them coming. And just to remind us, The code, the menti.com code, is 36462487. As I now call upon our group CEO, Dr. Peter Ndegwa, to join me on stage, followed by our group Chief Financial and Innovation Officer, Dilip Pal, to please also come up. And indeed, our Safaricom Ethiopia CEO, Wim van Halleput, if you could also please join me here. Yes. We'll get right into the action. We have about less than 10 minutes to do this, but we'll do justice to the questions that have come. And I want to start with those in the room. Any quick hands going up? When you get the mic, please give us your name and your institution, the one that you represent, before you state your question or give your comment. Anybody in the room? Do I see a hand? Yes, I see Kefa. And I also want to encourage media, please take this opportunity to also ask your questions, because there may be limited time after this to do so. So participate as much as possible. Kefa, if you could please proceed.
Yeah. Good morning. I don't know if I'm audible. I hope I am, yeah. Kefa Mwiro, Nation Media Group. 2 questions, I think both to Dilip. So Dilip, the first one is on M-Pesa. A lot of momentum or a lot of activity seems to be held within the application. So what do you feel is the significance of the application? And I know there were comments made also by Peter on the same, on making sure that that infrastructure is robust, because it seems a lot of M-Pesa momentum is coming from usage of application where, you know, the likes of ZD Trader, the MMF is only available there. I mean, it's a longer process on USSD. Then for my second question, this is on fiber to the home. You did mention that you have seen quite a growth in number of homes passed and connected, but the revenue there still double digit, but some sort of, let me not call it weakness, but some sort of a slower growth there. What we've seen recently is a review of the price, and for full disclosure, I'm on one of your fiber to the home packages. I'd like to know the thinking around increasing the speeds while maintaining the prices. What's the thinking there? Thank you.
Thank you, Kefa.
Thank you, Kefa. On the momentum on M-Pesa, and I think you heard me saying the growth in transactions volume is both the apps, just not the consumer app. Yeah. So I think sometimes we don't talk a lot about the business apps. Actually, business apps is also which is not necessarily in the current discussion point, but business apps also are doing very well. That one is also doing well. 50% plus transactions growth in the apps, that's what you're referring to. So I said that 25% of the growth in incremental revenue of M-Pesa is coming from the customers who are using different M-Pesa services through app. And of course, GD Trader or the money market fund, they are not necessarily the biggest component of the growth. The growth still remains in the volumes and values are the other ones. And we have seen, as I mentioned, on the beyond the traditional, the P2P or the consumer payments and the withdrawal, we have seen a significant growth trajectory coming up from financial services product. Yeah, wealth of course is part of that, but you have seen a significant recovery in the credit segments as well. Now, and I reinforced why that's important, because much of these are happening through the app. And as we always say, that the significance of app is engagement, experience, yeah, and of course leading to monetization. Monetization is not necessarily the reason why you do it. You do it because you want to have better engagement with the customers and you want to give better experience to the customers. So with all fairness and with all this, I think Peter did mention about our intention was to make what you are using, the consumer side of it, combining both Safaricom, the GSM services, fixed and the M-Pesa services in one app, right? The intention was to make it even better, customer experience. Yes, we did face quite a few challenges, and Peter spoke about it. That's why I kept repeating that the importance of that application is important. And the infrastructure that we have built, okay, now we are talking at the point of where we are at the receiving end of a lot of feedback from the customers. But it was actually meant to ensure that customers have the most safe and secured experience in the way they perform their financial transactions. And you will see that coming through, and I think the numbers speak for them itself. Even the new app, you have heard Peter talking about, the number has now reached 3 million. It's not a small number. Yeah. So the new app, yes, there are constantly feedback coming in. We are improving it. And that's why I want to say that we have done everything which is required infrastructure-wise, giving secured and safe, and that's what is reflecting in the numbers that you have seen in the past year, and probably it will show up also in the future years. The other point on so what I mentioned on the fiber is...
Can I just add on the... and I was actually, on a lighter note, I was telling Dilip today he is the one who is going to answer all the questions because the numbers are good. But if I add on the app, I think we need to take away the perception that the app is what is delivering revenue. So the customers who are using the app were using M-Pesa services before the app came. What the app does, it provides a house of value. So one of the reasons why we introduced the super app is so that everyone feels, like the way you go to a big shopping mall, which is, you can get everything you need in one place. But you would still get it, but you have to look for it in various places. That's the way you should think about the app. And then the second thing is the experience, and this is why it is kind of a contradiction. The experience is what we wanted, so it's intuitive. We can deliver the experience. We can design the experience we want people to have, because we know the experience on various channels is not the best. So therefore, we want, as we transition our business or our industry into 4G devices where everyone has internet access and the right 4G device, they should use the app. So that's the way we should be thinking about the app, rather than we're thinking about it because we want to rely on it from a revenue perspective. The second is, it's easier to offer more services because the platforms and the way you actually enable it, even through AI, it's easier to enable an AI-enabled, more intuitive. And also, from a security standpoint, it is easier to secure and less to have all this engineering and fraudsters attacking people. So that's the way we should be thinking about the app. A single house of value that allows intuitive, secure, a great experience for our customers. And then finally, we can also target specific segments, and we can now make it for you. If you think about segment of one, so we can now say, because the AI will learn what you actually like, they can now make sure the app actually shows up for you as we transition. That's why the AI side is also quite important.
Thank you, Peter. So, Kefa, on your second question, looks like, I don't know that I have landed the points in my presentation. Actually, 19.5% growth on home segment, a consumer segment, is quite encouraging. I mean, this is probably one of the best that we have seen. We are internally also looking at that number as something that we are happy about based on the progress that we have made. What I mentioned about is the slowdown in the business segment. The business segment growth was only 4%. The growth has its own ups and downs based on also the kind of offers, the kind of customers that you get. The basic point here is the recruitment of the customers. That are you adding more customers? You have seen that both in consumer as well as in the business segment, we are adding customers. Significant customers on the fiber side as well as on the fixed wireless. And they are now becoming material. Even fixed wireless is becoming material part of our fixed offerings. The markets, of course, evolve, and the speed experience is just part of the market reality. What you need to ensure that you are always ahead in the market to ensure the customer experience is the best. And And I think Peter did speak about in the future, you will see some of the other things that will come up in the going beyond just the connectivity or providing just the bandwidth. I think you will see that coming through in future time. I think that gives us the confidence, the investment that we are making. You've seen that we are making investment in fixed because we believe in the future of fixed business. We believe in the future of fiber business, and you'll see that coming through. And we actually are very happy with the consumer segment growth. Same with the customer growth in business segment, and the revenue slowdown was mainly on account of, I think we're adding more and more customers who are SME customers, which was not necessarily our biggest focus area in the past. Peter, you want to add anything?
Yeah. So Kefa is a very good question. Actually, we are not quite there. We are not happy. If I was to be very honest, if you talk to the internal people, I'll say, well, the conversation we have, we are not happy with where we are on the fixed side. What I'm happy though with is that now, because we used to be a very premium-oriented business, offering services primarily to this layer of customers and price points that only just hit certain neighborhoods and customers. Now we have the cost profile, so we've had to do a lot of engineering that allows us to offer services across all segments. We are an integrated player business. We don't distinguish between customers across the country. So we will be able to offer services to the middle, but also to lower income. That's why we are able to offer even services to affordable housing. And also tokenized Wi-Fi. As I said, we are piloting that. For you to pilot and actually offer it at the right price, you have to have the right cost profile, which we have been able to redesign the way you actually do the infrastructure and so on, and then connect the houses. So you will be seeing a lot of acceleration now that we are more confident. And then if you use AI, both to know where to actually put the fiber, but also combine fiber and 5G, you can actually be able to to increase the density of the people we can reach. And then the experience was also another issue. You have to send someone to someone's home. Now we can be able to predetermine remotely what is wrong with the customer connection and then go and fix it.
Thank you, Peter and Dilip. And now that you still have the mic, Peter, this question I'll request that you also respond to it. It's from Julians Amboka of NTV. Given M-Pesa's growing outsized influence, have we effectively moved from the case for a split to one of a reverse acquisition, meaning M-Pesa acquiring the telco venture?
Who did you say asked the question?
Julians.
Huh?
Julians of NTV.
Oh, Julius. Okay. Yeah. So it's a fantastic question, and we always get this question from investors, whether split or not. The way that I always think about this is when you look at Safaricom. Why is Safaricom successful? And internally, we've even spoken about something we call a triangle, which is we connect the country. We provide inclusion through financial services, and we wrap that around with a purpose story through our foundation, but also what our services offer. So we are strong because of the way we have been constructed. Our construct is the strength that allows us to do what we do every day. So we don't see the joint business as a weakness. If you separate it, then the two have to talk to each other. You have to contract between each other, and the friction for customers will be significant. So today we want customers not to worry about whether, and that's why the super app is actually now joining the two businesses together. So it's about customers not needing to worry. Now, when you now go back to now the question about split, we have already said there's no intended split. That has already been announced. There's no intended split, so I hope that I won't get that question in the future because we are not intending to split. The future, though, of M-Pesa, and I said we need to build a future-fit M-Pesa business, and what we are going now to is converged solutions that combine payments with other services of M-Pesa, but also GSM, and provide solutions both to the individuals but also merchants. For example, we believe that we can provide merchants services well beyond what they are getting today to enable them run their business. So invoicing, reconciliation, things that they don't need to invest themselves. So we will be a solutions provider to our enterprise business, just like what we are doing with the public sector. And that's the role that combining the two businesses has.
Thank you, Peter. I'll come back to the room for one last question, but before I do so, allow me to request Wim to respond to this question from our online audience. Very impressed with Ethiopia's performance in terms of it improving in the second half. And the question is, how significant is financial services in Safaricom Ethiopia's growth? How significant is M-Pesa in Safaricom Ethiopia's growth?
Good morning. Thanks, Caroline, for the question. So, of course, in the long term, M-Pesa is going to play a major role in the growth story of Ethiopia, especially because today the revenue contribution of M-Pesa is very small, still very small. Peter mentioned it. We started as a data network. We entered Ethiopia with a promise to bring quality mobile data connectivity to millions of people. We have delivered on that promise. We continue 60% population coverage. We continue to invest and to grow that. You've seen in the results. So after data, there is also now voice really kicking in, meaning we become more relevant. Not just a data network, but also voice services are being used far more now than it was the case 1 or 2 years ago. And so the third step of this maturity curve, if you would call it, will be that also the financial services will become significant in terms of the contribution. So this is a phased approach, data first, then voice, and then in the long term, for sure, financial services will definitely also play the significant role in the growth of the business.
Thank you very much. Wim, looking at this side, any question? Okay, if we could give the mic to the gentleman.
Thank you very much, and allow me to first start by congratulating you for the record results. I think this is amazing, and it keeps our country at a high, which we love. Of course, even Ethiopia. Allow me to ask this, because at the heart of every business is the customers they serve. And the good news will always be affordability. And maybe this is to Peter. Customers ask, anytime you lower cost, they're happy, like when you did with the bundles in December and the likes. So my question would be, how are we balancing the innovation that we're having, great work, the numbers that they can see, our shareholders of the exchange where I come from are happy, record dividend, but especially to the people you serve, and I love the impact video we just saw. How can we as well ensure that affordability keeps being the core where we balance our profitability and innovation? Thank you.
Thank you.
Yeah, I think that's the most fundamental question that we actually ask ourselves every day and hold ourselves to account every day. And even in any conversations we have internally, are we having not just success, but is it affordable? And when you look at what we have been doing in the past 5 years, I'll just give you the statistics. Data price has reduced by 70%. Yeah, we are in the bottom quartile when you compare with all the other African countries in terms of price per MB or per gig. And we are continuing to extend that by segmenting customers and being able to provide price points that work for those customers. So if you are youth, through the S-Hook, I talked about BeLife, which is a time-based offer. So not having to see customers as just one customer base, and actually saying, what are they able to afford? So on one hand, you have lower prices, so data price has reduced by 70%. On M-Pesa, you saw that close to 60% of transactions are free. It was deliberate. When we came from COVID and we came back to charging P2P, we deliberately reduced pricing. Yeah. of all our transactions, and also, of course, made the Kadogo free. But all the rest of the pricing has been reduced over time, and we will continue to do that in the next few years. So we've reduced pricing of an M-Pesa by about 2/3. And you saw the level of free transactions. And what we say is, those people who are actually transacting every day, buying bananas, paying bus fare, and doing all these things, they don't need to have friction in using our services. But once in a while, they will also pay for a product. But even if they don't pay, it's fine, because we have a large franchise that allows us, just on the, like we do on the connectivity side, the rural people actually are net receivers of calls. That is actually subsidy. The urban people call, but we put those sites and it costs us the same money as it costs in the urban areas. So we think about affordability in a very significant way, and voice has also continued to come down. The whole focus on the super app is also to bring a lot of value in one place. So it is an issue we discuss every day. I think Kefa is the one who said, where are you doubling bandwidth on the fixed side and still charging me the same price? It was again a deliberate choice to say, let's increase bandwidth, but actually let's retain price. And also that's why we have actually been able to reduce all those costs to be able to access those lower segments. So price points is very important. Affordability is quite important.
Thank you. Thank you for that. There are many questions, and I see those hands, and I also do have quite a lot also on the Menti platform. The beauty is that this is just the beginning of these engagements with our results, and I also want to confirm the materials have actually been loaded on the website, so you can download those and interact with. So we'll have various platforms to engage with your questions. And for those that may not be part and parcel of some of the platforms, you can always reach us out on investor relations at safaricom.co.ke. That's our very active email address where we address all questions that come through. But there's one I'll read out more to just ensure that the writer of this one takes away the fact that we've noted the request, because we have the group CTIO in the room. And the question is, why no network in Ngong-Suswa Highway? And I think I've gotten like 3 of that same question about Ngong-Suswa. So we've taken note about the network. I mean, we have network in underserved communities. We should ideally also have it in the Nairobi periphery. So we've taken note of that as well. Allow us to now bring this to a close, ladies and gentlemen. Indeed, it's always a pleasure to have these conversations with you. We are glad that you made time to join us for this conversation. For those in the room, please appreciate for me the gentleman seated alongside me. Great results. We are grateful that we've been able to deliver impact for this market and indeed for the markets that we serve. We just want to say that at this particular juncture, to wish you a good day ahead, to stay connected to our Ethiopian colleagues and community. Amasegenalu, thank you very, very much. Do have yourselves a great day ahead.
We dream of a day when no one will have to maneuver for long distances in search of a phone signal, and I believe that day is coming soon.
In places where connection once felt impossible, communities learned to live without being heard.
And then there is this trending. The trending, the breaking news, the things that trend. Hiyo hatuna habari kabisa. Hebu utasikia after 5 days, 1 week, labda rafiki yako tu ukimpigia simu anakuambia unajua ni kitu hivi na hivi ndio ilikuwa inaendelea hapa Kenya.
And the challenge wasn't just access, it was scale.
Can you imagine Sabare sublocation that we have been visiting is 4 times the size of Nairobi County.
Na tunataka kupitisha information mpaka uende na mguu ama utafute gari. Hata gari kupatikana sio rahisi.
Wakati wote ukitaka kupiga simu, watu wanatembea for some kilometers, tafuta network. But right now, we are enjoying.
Sababu mbeleni hata wakati unafanya biashara kidogo, watu wengine wanasema pesa iko kwa simu, kumwambia uende toe, wanaenda 2 kilomita kutoa pesa, hapo katikati tu wanafanya njaro yao, wanatoroka na pesa. Sasa in the spot, watu wanatoa hapo tu.
What once took hours is now within reach.
Mbele nilikuwa tunaenda mpaka Isiolo. Unaenda kwa cyber, nilifanya kwa cyber. Lakini sasa hiyo saizi imekuwa ni hadithi. Sababu sasa unatumia tu simu yako hapo. Unafanya everything. Unafanya tipaji yako vizuri. Kama ni assessment ya NEC imekuwa rahisi sana. Network iko nzuri. Hakuna stress.
And sometimes impact goes beyond what you can measure. Because when people are connected, opportunity follows.
Simoniambie bye.
We dream of a day when no one will have to maneuver for long distances in search of a phone signal, and I believe that day is coming soon.
In places where connection once felt impossible, communities learned to live without being heard.
And then there is this trending. The trending, the breaking news, the things that trend. Hiyo hatuna habari kabisa. Hebu utasikia after 5 days, 1 week, labda rafiki yako tu ukimpigia simu anakuambia unajua ni kitu hivi na hivi ndio ilikuwa inaendelea hapa Kenya.
And the challenge wasn't just access, it was scale.
Can imagine Sabare sublocation that we have been visiting is 4 times the size of Nairobi County.
Na tunataka kupitisha information mpaka uende na mguu ama utafute gari. Hata gari kupatikana sio rahisi.
Wakati wote ukitaka kupiga simu, watu wanatembea for some kilometers tafuta network. But right now we are enjoying.
Sababu mbeleni hata ukazi unafanya biashara kidogo kidogo. Watu wengine wanasema pesa iko kwa simu, kumwambia uende toe, wanaenda 2 kilomita kutoa pesa, hapo katikati tu wanafanya njaro yao, wanatoroka na pesa. Sasa in the spot, watu wanatoa hapo tu.
What once took hours is now within reach.
Mbele nilikuwa tunaenda mpaka Isiolo. Unaenda kwa cyber, nilifanya kwa cyber. Lakini sasa hiyo saizi imekuwa ni hadithi. Sababu sasa unatumia tu simu yako hapo. Unafanya everything. Unafanya tipaji yako vizuri. Kama ni assessment ya NEC imekuwa rahisi sana. Network iko nzuri, hakuna stress.
And sometimes impact goes beyond what you can measure. Because when people are connected, opportunity follows.
Simoniambie bye.